Okay, hello traders, and welcome to this intraday strategy webinar. Today is Tuesday, May 11th. Mike Boutros with you on the horn. Great to be with you guys. Jay, Rohan, everyone in the room. So it's interesting start to the week. I actually don't have that much new or that many new things to present. If you were with me on the webinar yesterday on Daily FX, we've kind of been we're kind of stuck in this holding pattern at some major key levels. Dollar made the stretch post NFP. We did see a break lower. Yearly trend line support. This is the weekly chart, and DXY seems to be broken. But just as things are starting to be a hopeless spillover, you're looking at the SPX with a rather big spill here, guys. Ahead of the U.S. Open, this thing is on a major sell-off. Yesterday on the SPX, we did post an outside daily reversal off the highs. Something's up here. So we'll go over these rather briskly today. Again, we'll touch them again on Wednesday. Hopefully we'll get a little bit more clarity on some of these opening ranges, but just a short list: DXY, Euro, Dollar CAD, Sterling, Gold, Aussie and Kiwi, a quick look at those, as well as Dollar Yen. And then we'll come back to this stock photo in a moment. This is pretty big initial support right at 41.30, guys. We're approaching that here today. All right, any other questions? As always, feel free to throw them on the message board at any time. Again, here's DXY in the weekly. So we posted an outside weekly reversal last week. We talked about that in the webinar yesterday, taking us below downtrend support or lateral support. Here's uptrend. We closed below that last week, and that's what we talked about the webinar yesterday. Initial lateral level of significance is this year's objective. Yearly open 89.93, and that's still my main focus here. If you take a look at the DXY and the daily chart, by all means, February low day close, 618, the 786 rather, retracement of the yearly range. Here's the 21 open. So we're right in a pretty key zone, right? Even held constant things right now, this is divergence on the daily chart. Subtle, but the subtle ones are the ones that typically actually are pretty decent. So we're at support, you know what I mean? And you have a super tight weekly opening range taking shape. I highlighted that range yesterday in my piece, and that was right here. 90.33 into this 90 handle, this major key zone. I want to see a little bit of a range break there, and that's what we're getting right now. All right, so no change. We literally tagged that 3 times in overnight trade, and we're still respecting this real tight coiled weekly opening range. We need a break below 89.93 on a close to get this thing running, or a break above 90.33. 90.90, 90.92 this is the near-term bearish inval. Even if it rallies to here, you're not out of the woods yet. This is what you would need to beat to sort of validate a larger shift, a larger reversal in the dollar. Okay. Rohan says, I know it's a funny question, but why risk off and no dollar strength? Okay, Marchin, good morning. Pound Oz and Pound Key and Swiss yen. I got you. So Rohan, that is a funny question. I don't want to get too deep into the weeds with you on that, Rohan, but I'll just give you my humble opinion. I have a little bit more latitude here on SB as I do with Daily FX. Look, the risk-off trade inherently is what the big focus is in the months and really years ahead. Is do the risk-off seekers diversify away from 2 major historical values of wealth, right? What you put your store of wealth is typically the dollar, right, and gold, right? Both of those are being challenged right now. Why? The dollar is being challenged because you have unprecedented central bank liquidity just flooding the markets, right? The concern is inflation. Now, tomorrow's inflation print is going to be important, Rohan, because we've already gotten the Fed starting to come out and say, well, this is transitory. We heard this back in 2007. There's nothing new here. That these are transitory conditions because of the reopening, because of the sudden pent-up demand from COVID now coming to play and coming to the markets. You're going to see that near-term spike in prices. I humbly disagree. That's just Mike Boutros. That's my opinion. Anecdotally and physically, more evidence is prices are going up across the board, whether it's lumber, you name it, right? Soy, cocoa, whatever agricultural thing you want to look at, whether it's oil prices are gonna, they're on the pullback today, and we'll look at that, but those are long term, I think, at risk for sure, as energy sort of comes under fire here. So is the market buying that there's inflation, Rohan? That's going to push them out of the dollar, even in risk off plays. And what's been kind of feeding this has been the move into cryptos. And that's what people are calling, quote unquote, a store of wealth now. I think it's absolutely insane, in my humble opinion, to put your store of wealth in a value of an asset that can value or fluctuate rather 60% in 1 month or 1 day. But those are the arguments. Those are the arguments. And Rohan, don't be married to these static terms that people will throw out. Risk off, it's got to be dollar strength, gold strength. Risk on, it's got to be dollar weakness, stock strength. These correlated moves are in panic mode, right, Rohan? We see these correlations and relationships the strongest when markets are in straight tank mode, because everyone's just looking for the exit. What's the safest thing to jump into? You see those assets surge. You're not seeing that here, right? So I wouldn't want to push you directly into or away from the risk off, risk on theme, but know where to kind of focus right now. He says, yeah, I guess market is waiting for the Fed to back off a little on its assumptions. They've held pretty steadfast. Rohan, rates are going to be zero for a long time. We're not moving. We're not even reaching the point where we should start talking about rates, quote unquote, is the last Fed meeting with Powell. So it's going to be interesting to see if they wake up. Tomorrow's core inflation read, guys, we're expecting a year-on-year inflation print of 3.6%, right? Last read was 2.6. Fed's target is 2. Now, obviously, core inflation is expected to be over 2 already as well. That's 2.3% expectation tomorrow from 1.6. But the point is, they've essentially charged the markets and kind of prepped them for this. We'll see how far off that comes into play. But little tangent there for everyone in the room. Sorry, guys. Rohan, I hope that offers some color to it. But for the dollar's part, guys, we're at support. Watch for a break of this weekly opening range. 89.93 is what you would need to break on the downsides, the objective yearly open. If we pop higher, 90.90 is what you need to clear to validate a larger turn in price. So I'm going to segue real quick into the euro. I got no plays here either, guys, at this point, but same levels I showed you yesterday, a real quick top-down approach from euro, again, from the weekly chart. Right? Not really at resistance, not really at support. I don't like where we are in the weekly, noting momentum at 60 as we try to push higher here. Here's euro on the daily. February high day close, 121.68 is the level that we've been sort of looking at. And then the thing I quoted yesterday in the webinar, guys, was this longer term slope. This is the same slope we've been following on the daily chart. Does that median line give us a bigger pivot inflection off 21.68? That's my focus. So I think the long side basically into the zone's vulnerable. Here's euro's yearly open just higher. So again, no change really from yesterday, guys. It's the same levels. We've just been moving sideways laterally in all of these. Here's euro on the intraday chart now, and here's euro as it looked last week. Here's the update. Right ahead of the Fed, or right ahead of NFPs, there was the breakout zone and our bearish invalidation, right? Blew right through that. We're at the February high day close. Weekly opening range taking shape just below. Again, pistol to my head, I still think, are you positioned or just on sidelines ahead of event risk? So Rohan, for euro and DXY, I'm flat. Yeah, I don't have anything. I would like to take a fade in this rally, right? On the back of this advance, I'm definitely not interested per se in getting long. But whether it's here or whether it's one last spike into the yearly open, the high that we made back for February, to play the fade, I don't know. I don't have enough evidence. I need a catalyst to get this thing going. You want to be very cautious to fight or go counter trend trades on rallies like this. It's just not prudent. So I need something more in the technicals, Rohan, to shift my focus. So DXY and euro, I'm looking for some clarity on the weekly opening ranges. There are more favorable positions elsewhere. That's 1 and 2. Here's number 3, dollar CAD. Similar scenario in this one. You're looking for the extension to kind of stretch. No change on the levels. Here's dollar CAD as it looked last night. You know, the big setup here, or the big, I guess, main play was the break of the lows, right? And the break of downtrend support. And the two levels that we noted were right here at 121.56 and 120.48. You can see haven't quite made it into 120.50. Here's the daily chart. Here's what it looks like right now. Here's the intraday chart. And here's what that looks like now. Real tight weekly opening range. I mean, this thing is literally like crawling sideways. So this is the zone. I want to see a pivot here. 2056, 2060, it's 2017 low, 50% of the rally. This is the same slope, guys, we've been following since last week. Again, you can always click on the previous update. It's the same slope. We're dancing just above this 50%. Hope we get a kick. We have 0 Canada data of worth of note over the next 4 or 5 days, basically this week. So look for US. Essentially, it's going to be core inflation and retail sales into the close of the week. They're going to be the major players. Where does the 50% fib come from, Ted? On this? Sure. This 50 comes from the advance off the 2011 lows. So I guess it'd be easier to show you here on the weekly charts. So Ted, that's this whole rally. From the 2011 low all the way to the highs he made in 2016. It's also, Ted, one of the reasons that let me take a step back. A fib, as it were, a 50% is not an actual true fib, right? Fibs are all derivation of the 618, or all derivation of the Fibonacci sequence. 50 is just half, but a lot of times markets do have a very big tendency of pairing half the move, then rallying. As I always tell you, confluence zones are where it's at for me. So not only is it the 50, but it's also the actual stretch low that you made back here in 2017. That stretch low came in at 2061. So again, a little 10 pip, 15 pip gap of an interesting inflection range there on the downside. Okay, cool. He says, got you, got it. Thanks. Yes, understand the 50 as well. All right, cool. Right on, just some clarity there. So same thing. Is the dollar sell-off just going to continue and just plummet straight to hell? Or do we get some sort of interruption, some sort of relief off of these key levels, both on the upside for euro, downside for DXY, and downside for dollar CAD? Both those levels, or all those trades, are approaching, but not quite at possible inflection zones. So again, wait for the weekly opening range. Here is number 4. And this is the British pound. So sterling, ripperoo, absolutely massacred the bears. Looking very interesting here. I wanted to show you the weekly chart first. I showed you this yesterday. There's nothing on the weekly standpoint between here and 42, essentially 43. It's 42.30 into 43. It's the 2018 high close. And actually the highs that we made for the year. So this whole zone, right? But just to show you where we are. Divergence, all things held constant. If we were to close at this level, you have a higher high in price, you have a lower high in the oscillator. What's up? What's up? I'm looking for exhaustion on a stretch higher possibly. Here's what it looks like on the daily chart. So sterling, one of the trades, in the event of dollar weakness, let me just take a step back here. This is one of the trades that I think you favor the most. If we have an outcome where you're taking shorts or you're taking longs on the dollar, if you find some toppy price action euro, bottomy price action dollar CAD, something to kind of offset a synthetic hedge, this is where I think the dollar has the biggest problem. Sterling made a huge rip, multi-month week highs, breakout. Here is the high day close for the year, 141.38. And again, just a nice pivot high from back here in 2018. Really interesting zone. Former slope support, 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 break, resistance, resistance, resistance. What's up here? Looking for some price action inflection in sterling off these levels. The top side break from here, like I said, 43. The bottom of that zone on the weekly chart I have at 42.36. I might as well just highlight that here. Here, soft target, but it's really the 43 handle, which is going to be the bigger play. Sterling on the intraday looks like this. Even on a slope, independent of all the weekly and daily analysis that we just looked at, just a low, high, low, support, support, resistance, resistance at the high day close, 41.38. I'm looking for something here. Looking for something here. If you're long, a good area to tidy things up, bring your stops up. If you're not anything, like I said yesterday, if anything south of here, I bring my stop up to the 40 zone, if not higher. And a breach from here, you could see a pretty decent run of uptrend resistance. That said, we're at uptrend resistance. Not a good entry for a long. Might be a decent spot to shave off a little bit, bring your stops up, looking for a pivot. Close above this today would keep the focus on 43, in my humble opinion. Now, tomorrow we do also get some data out of the UK with those GDP figures, expected to be much better than the figures we got last quarter, but still only a print of what, like 1% year on year for the month of March. So we will see if those releases tomorrow offer any catalysts here in sterling. But again, I think the bigger print is going to be that US inflation read at 8:30 tomorrow morning. Questions? British pound flirting with uptrend resistance here. And here was our last sterling update from last night. No change to any of those levels. All right. Number 5 is going to be gold. What the heck is going on with gold? So the big level of resistance is just higher. I don't want to touch this thing until we get either a test of that or a confirmed reversal pattern, something to give us indication that the exhaustion sort of is out. Here's gold first on the weekly charts. 2021 high week reversal close, 1850. That's the resistance zone we're talking about. I might as well get rid of this 38.2 here just for the sake of clarity. I'll leave that there for now. But that's sort of the breakout level that we're looking at for this gold trade, which has obviously snapped, excuse me, downtrend, multi-month downtrend resistance. Here's gold on the daily, right? Breach of uptrend resistance, should see acceleration. There's the 618 of this year's range, 1851. We just talked about 1849 on the weekly charts. So 1850 comes up as an area we want to see something happen. Here's what it looks like on the intraday. In case that wasn't enough, you have a 1618 extension from the advance off the lows. That extends into 1854. You have the February open at 1848. All of this straddles 1850, which is why I was looking for a reaction there today. Now we didn't, or this week, we didn't quite get there. The high's 1845, but man, sorry for mentioning about moving averages here, but another one comes in around 52. Hey Jay, never apologize, brother. I'm always I love when there's again, convergences are everything. What moving average are you looking at that's coming in there? So I do have that 100-day moving average, which is highlighting 1795, and we talked about that last week, right? Blasted through. So you're talking about the 200? Let's see. Love it. Love it. Absolutely. Absolutely. So the 200-day moving average, thanks Jay, also converges on that 618, on the 1618, on the February open, on uptrend resistance, basic trend slope, parallel, parallel. Near-term support 1818, bullish invalidation, right back at 1795, right there, which was where the 100-day moving average was, right, Jay? Love it. Love it. So while near-term momentum is getting tired, you're seeing the rally. Again, we talked about this even yesterday in the webinar, the divergence that we were seeing into the highs. The advance is vulnerable into 1850, and we're looking for possible inflection there. Maybe you get the last spike, pump fake, and then it fails for a pullback. At the end of the day, a close above this zone would certainly be resumption, straight up resumption, if not acceleration of the broader gold uptrend. Questions, comments, concerns on gold? Okay, a quick note on Aussie Kiwi, Aussie and Kiwi, not Aussie Kiwi, but typically my favorite trades, haven't done anything on them. I am of the big mindset. I'm with Jamie on this one. I think this risks exhaustion. The pivot above this zone, which was huge for me. I talked to you guys about 78.25, 78 for literally months. 1, 2, 3, 4, 5. This was the 6th attempt. If this was a breakout, man, I would have wanted to see more than that. This screams exhaustion. You gapped higher, you pushed through resistance, then you closed lower on that day. So, I'm just scoping out this near-term channel. And maybe this is a raised ceiling scenario, failure ahead of resistance. Bottom line, we need to pivot below 78 to mark sort of a reversal pattern here in Aussie. So I'm scoping this one out. Again, no, not interested in the long side unless you buckle above 79 on a closed basis. And we'll be scoping near-term price action here to see if we can kind of gauge an entry. What does it need to spike into? Well, Rohan, I want you to take a step back here and not use that word, need. I wouldn't say it would need to spike into, but if it would surge into the 79 handle, into that upper parallel, and then sort of fail something like this, right? Something like this into parallel support, something like this, but on the upside, that's your conviction, right? That's like the fade move. Like, oh, the bulls all of a sudden think they got it, and then all of a sudden, all the guys who are closing out their long positions already, just cascade effect. And once you get that sell-off, selling, begets selling, and it's a quick cascade order. Dude, I learned all this from just sitting on the trade desk all those years, watching order flows come through. So we'll see what this does. All things held constant on most of these setups we're following today, they're all setting up a really tidy weekly opening range. So hopefully we get that clarity break in a couple of days. Here's what Kiwi looks like. Similar scenario. I like Kiwi in that it's actually still holding resistance. So here's the high day close from January. Here's the 618 of the yearly range. Here's last month's swing high. You know what I mean? Like, what is that? Not only that, you look at this, whoops, and you see higher high, lower high. Subtle divergence. Both reference points are pretty darn close to 50. That's what you want to see. That's actually a pretty decent signal. So for me on Kiwi, I do want, again, I want to see an exhaustive move. I want to see a pullback. So watch for a break of the weekly opening range. In this scenario, in this specific trade, if we were to get that spike, Rohan, what we were just talking about, like if we do see the dollar just take one last shuffle, let's say inflation comes out tomorrow, like super high or something, a stab into 73.50, 73.60, the high day close for the year would be the next sort of key level on the upside. So, and again, we're thinking about I don't want to pull you guys into this mentality. We're always thinking to fade every rally. No. It's an uptrend. It's just that the uptrend has been pretty mature, and we're running into areas which could offer a little bit more of inflection in the days ahead. And not only that, everyone and their mother is getting super bearish the dollar. I was just flipping through, the financial publications this morning, even on CNBC. There was a gentleman that was I highly respect him. I actually like the guy, but he was talking about the dollar possibly losing reserve currency status for the US, for the world and all this, but in general, just super uber bearish. And everyone's been super uber bullish stocks. Let's take a look back at stocks, guys. Here's what the SPX looks like. Red alert, red alert. So here's the slope. I'm just going to put it on here just again for reference. Here's the slope that we were following, right? And we talked about that break last week. It pulled right back in. We started getting a little bit iffy about this slope. So we said, focus on basic trendline support off the March lows. Converges almost where we were with the low that we swung for the monthly opening range. Well, we're challenging that region now, okay? Yesterday, as I noted earlier, we posted an outside daily reversal candle off fresh record highs. That's when these candle formations actually tend to be very beneficial. The last time we did that was right here. So again, I'm not saying that we're on full reversal mode here, but you could see a similar scenario like we did back in March where you get another correction of 3.3% or more. When was the last time before this we made an outside daily reversal into fresh record highs? Very simple, right here. Again, wasn't full on reversal, but you got again another 5% drop there. All right, well, maybe those are 3 cherry-picked examples. What about before that? Don't have to look too far. Right here. Outside daily reversal off the highs there gave you another, again, that was a bigger decline of 6%. So these outside daily reversal patterns can be very helpful. They're very useful in SPX. They tend to work pretty well. That one at the record high in this environment, I do think risks a little bit more of a setback. So that brings us to the intraday chart. And that's what I'm looking at right here. Also, on this daily, before I move off, there was a lot of discussion yesterday in the webinar on daily effects. I don't know what happened. Maybe someone went through the foundations course and they stumbled on RSI and they just had all these questions, but tons of questions on RSI. It just brought my attention again here. So I just wanted to show you, this is where RSI becomes operable. So we just talked about the outside day reversal off of record highs. We just talked about the last couple times that's happened. Now we take a look back. Is there more evidence to suggest we're at risk of a little bit more of a washout? Well, higher high, higher high, higher high, lower high, lower high, right? Here's what happened last time. Higher high, higher high, higher high, series of lower highs, and that was also an outside day reversal candle. So you can see the similarities, guys, that continue to manifest over and over and over again. We're on the lookout for a possible larger washout here in the SPX. Here's what the intraday chart looks like, just a basic high-low high off the highs for this pitchfork. Maybe in play. I don't want you to put too much emphasis on this slope because we don't have enough touch points yet. But what does it highlight? This 25% parallel highlights support at the lows, monthly opening range lows, at the swing lows that we made for April back on the 20th. That gives you a range of 41.20 into 41.29. Watch for inflection there. If we break there, objectively, that's going to be a reversal pattern, right? That would be an outside weekly reversal off the highs, fresh record highs, with a momentum trigger break back below 60 or 70 rather. Those are operable triggers. No one wants to talk about this. The equity guys are not going to want to make these, observations, but that's what the technicals suggest. Now, before you start going, ending this webinar saying, "Wow, Michael's bearish to the hilt," on equities, we haven't broken yet. That is the threat. That's the risk if we are to break below 41.20, specifically on a closed basis. All things held constant, that's support. That's support today. Questions, comments, concerns on SPX? Okay. Number 9, a quick look. I forgot to cover just real quick. Dollar yen. I just wanted to show you what this thing's doing. Really nice reversal here as well. Remember last week we were talking about the monthly opening range and the weekly opening range for that matter, taking shape just below key resistance, 109.63 into 109.90. That's now still the monthly opening range highs. Here's the break, kind of faltered, and we've been straddling last year's open for a while. All things held constant, guys, this is a simple weekly opening range. Okay, forget the 2020 open, we're just straddling that. Break below 108.35 would be the spill. You need to clear 106.60 on the upside to get resumptive move. But the whole point is that if we have really broken this near-term uptrend off the lows from last month, might have a little bit deeper of a setback to go here. In fact, something like that still brings into focus the possibility for a dump towards like 106.70. So we'll see if that materializes. I'm not going to give you much help there, but keep an eye on that slope. I always get chopped up into event risk. We'll watch the levels once the print is out. Yes, it should be interesting tomorrow. I really, you want to be set up there as well. Marcin says a 200-day EMA there on dollar yen. I have the 200-day down here. So the 200 exponential moving average does tight up a little bit higher, but that's still near 106.80. Ways down from where we are. This is still the big support zone for dollar yen for me. If we reach 108, that's really where what I want to see a bigger inflection. But still pretty clean. So that's dollar yen. That's everything I had on my list. Let me get into your questions here before we wrap things up. Who is this? Marcin, as you mentioned, Aussie Kiwi would be nice to look at too. Oh, so here's what Aussie Kiwi looks like. I haven't been paying much attention to them because they've kind of been working in lockstep since the start of the month. So you can see here, I mean, even last month, right? Basic trendline support off the yearly low. We've done nothing. There was an outside day reversal last week. I have been actually kind of tracking this one to see how this coil breaks out. And I'm kind of interested in seeing just that, how this coil breaks out. What is this? Okay, and this is the EMA. Get rid of that. I want to see how this coil breaks out. That's all I'm looking for. It's either breach above 108.33, which is the 2019 high day close, or a break below essentially the monthly opening range lows, but that yearly slope to give the play. I don't have a strong opinion on this one way or the other. If I had to put a pistol to my head, I would think that there's still risk break to the downside, but we're at uptrend support. So watch the coil till it gives out. The ones that you wanted to look at, Marcin, were pound Aussie. So here's pound Aussie, certainly something that we were following at length last month when we first turned from uptrend resistance, major key resistance, and that breakdown really, really nice coming to the 77.40 level, which is a basic 618 of the yearly range. And that's where we've been ever since. So it's the battle of the 618s. 180.65 on the upside, 177.40 on the downside. That's the kind of range break you need. On this trade, yeah, it's longer term. I do like this trade to the upside. Near term, Marcin, I think the advance is gonna be a little bit higher. It's still below 81, 81.50, like this zone here. just because of the way the near-term structure it looks like 5 waves up to me. So the whole broader trade does still look constructive, but I don't like that slope is right there. There's former swing highs there. Obviously the 618 resistance, which you're testing right now, this is just of the near-term drop. So you're at resistance on some building divergence. I don't, again, not an operable trade for me. Pistol to my head, I'd say look for topside exhaustion there, or just be a pullback trade though. Range, you're at the top side of the range. Near-term guys are looking for exhaustion up here. So you're all about the Sterling crosses, huh? What was the other one that you're looking at? Sterling Kiwi. So that's going to be a similar scenario, I assume. Obviously, that's a much tighter rebound. You haven't even pulled a 618 of that rally. That's still got a little bit longer to go there. Less conviction on this one. If you were pointing a gun to me and say, which one's going to see the bigger losses, is it Aussie or Kiwi? I would still favor the Aussie losses over Kiwi losses, meaning Sterling strength versus Aussie over Sterling strength versus Kiwi, my humble opinion. So if you're looking at both of these, the more compelling breakout, in my opinion, would be on the Aussie side. And the last one you wanted to look at was, let me just see if there's any. Yeah, this is an even tighter. This is an even tighter monthly opening range. That 50% was like rock solid floor, 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 floor. This is a range bound conditions anyway you slice it. Watch that slope, possibly. Still gives you a red flag here into 95. All right, Marcin, interesting crosses you're looking at, man. What was the last one? Swiss yen. Not a fan of the trade, as you obviously can tell. I haven't really been scoping this one out, but I can just tell you conceptually, dollar Swiss has been tanking, right? So that's Swissy strength. Dollar yen has been tanking. That's yen strength. I don't really like to correlate per se trades necessarily by having to think about it in such a way. So it's like a multi-month low there from March. Ugh. So here's the high from 2017, 118.60. Monthly open support 119.54. So look, it looks like you're coming off of uptrend resistance. So setbacks, monthly open support 1954 would be your first area of support. Bullish invalidation 118.60. Topside breach from here. We'd have to kind of reassess the target, but just on whole, let me just see what this looks like. So you sparked my interest. You sparked my interest. I don't necessarily have a terminal failure here. I still think it could spike higher, but at the end of the day, you're at uptrend resistance. Whether it's here or even if it stretches closer to 121, you're still up towards uptrend resistance. So margin, I hope that gives you some picture, some color. Interesting trade. I can confidently say I've never traded this in my life, but nonetheless, if the setup is there, we'll take a look. Watch for a possible kickback here. Watch for a possible kickback here. Could you also take a look at oil? Absolutely. So oil is at an interesting juncture as well because it's kind of counterintuitive that you're seeing this pullback, especially in light of everything that's been going on with the shutdown of that massive pipeline in the back of that cyber attack. Look, things can be deceiving for a little bit. We came off of uptrend resistance. Here's the only chart that you need, in my humble opinion. This is the intraday chart we've been following on crude oil. May open 63.45. The bigger support zone into 63, 62.87. That would be 100 off the high. So even if this whole thing is corrective, we would still need a lot, a drop towards this region before we would start to invalidate any uptrend support. So I'm kind of looking for a low. 63.45, 62.90. Rohan are both of the levels that I'm kind of like looking for a bigger reaction. Obviously, just near term, a lot of people are just going to be looking at something very simple, like a near term bull flag possibility, right? Near term, that would imply, again, we need a breach above 65. That's the weekly open, downtrend resistance, that break to get the resumptive move. Make sense, Rohan? All right, and we will call it a day there. Hopefully we get a kick on some of these moves. Watch the inflation data again tomorrow. We're expecting a print of 2.3, inflation on core. Headline read 3.6. The deviation off that is what the markets will be trading off of, not necessarily the number in and of itself. So keep that in mind. And we'll be back on Thursday. Hopefully get a kick to some of these trades and some of these things moving. Till then, best of luck trading, guys. Cheers.